Welcome to Finance Deep Dive. Today, we are diving into a topic that is, quite literally, the language of business accounting. Now, I know it can sound a little intimidating, but trust me, it all boils down to one really powerful question. Right? I mean, how does any company take all the moving parts, the sales, the bills, the paychecks, and turn all that chaos into a story that is clear, honest, and actually makes sense? Well, that's exactly what we're going to figure out in this video.
And to do that, we're going to follow the journey of a single dollar from the moment it comes in the door all the way through the system. We'll use a fun little fictional business, and you're going to see how this whole entire world is built on one simple, elegant idea.
That's it right there. Forget all the complicated spreadsheets and jargon for just a second, because everything, and I mean everything from the hot dog stand on the corner to a tech giant, is built on this one fundamental concept: perfect balance.
And here it is. This is the whole game, right here. The accounting equation. This is the golden rule, the law of the land. It means everything a business owns has to equal everything it owes. It's not a suggestion, it's a rule. It has to balance every single time. Let's break that down. So on one side of the scale, you have your assets. This is all the valuable stuff you own that's going to help you make money down the road. Think cash, equipment, buildings. Then on the other side, you have the claims against that stuff. What you owe to outsiders, like a bank loan, those are your liabilities. And what the business owes to its owners, that's equity. What you own equals what you owe. Simple as that. Okay, theory time is over. Let's see this thing in action. Let's meet our business, Rough Times, a hard-hitting tabloid newspaper that's got all the latest gossip on the neighborhood dogs. And business is booming. They just landed their first big sale. So Rough Times just ran a huge promotion for their annual subscriptions. And bam, they brought in $40,000 in cold hard cash. That's fantastic news, right? But now comes the real question. How do we actually record this? How do we start telling this financial story? Well, we start right here with something called a journal entry. You can just think of the journal as the business's official diary. Every time something financial happens, we write it down. We note the date, a little description of what happened, and which accounts were affected, using two very special terms: debits and credits. Now, hold on, don't let those words freak you out. Debits and credits are probably the most misunderstood things in all of accounting. They don't mean good or bad or plus or minus. Nope. They're just about the direction of the transaction. It's a clever little system designed to make sure our big equation stays perfectly balanced no matter what. Here's the easiest way to think about it, I promise. Just think of debits as the destination. That's where the value is going to. And think of credits as the source. That's where the value is coming from. That's it. Every single transaction is just a story of value moving from a source to a destination. So for our friends at Rough Times, where did the value come from? It came from the subscription revenue. That's our source, so we credit it for $40,000. And where did that value go? It went to their cash account. That's our destination, so we debit it for $40,000. And look at that, the debit equals the credit. The equation is perfectly balanced. Okay, so once we've written the event in our diary, the journal, we then post it to the general ledger. The best way to picture the ledger is like a giant, perfectly organized filing cabinet. Every single transaction gets sorted into the right folder, so we always have a running total for cash, for sales, for expenses, for everything. By the way, if you are liking this content and finding it useful, don't forget to hit that subscribe button. It really does motivate us to keep making more videos like this one. All right, so we've recorded the cash coming in. It's in our diary, it's filed away in the ledger. We're done, right? Well, not so fast. To tell the true story, we have to ask a much smarter, more subtle question. This right here is such a critical idea. Think about it. Rough Times has the $40,000 cash in the bank, which is great, but in exchange, they promised to deliver a newspaper for the next 12 months. So have they really earned all of that money on the very first day? This leads us to a massive concept called accrual accounting. You see, the official rules of the road, things like GAAP here in the US and IFRS for much of the world, they demand a more honest picture. They say you can only record revenue when you've actually earned it by delivering the good or service, not just when the cash happens to show up. So let's jump forward in our story. It's now the end of the year, 9 months after that big subscription drive. Rough Times has held up its end of the bargain for 9 out of the 12 months, so they've only truly earned $30,000 of that money so far. That other $10,000? Well, that's still unearned. Their financial story has to reflect that reality. And the way we fix this is with something called an adjusting entry. It's just another journal entry we make at the end of a period to make sure the story is 100% accurate. We move that $10,000 that hasn't been earned yet out of our revenue account and into a liability account called deferred revenue. Why a liability? Because Rough Times still owes 3 more months of newspapers to its customers.
Okay, now that our numbers are all cleaned up and accurate, we can finally get to the big payoff. We can prepare the final reports. These are the 3 main financial statements that tell the entire world the complete, true story of how your business performed.
First up, you've got the income statement. Think of this as the movie trailer for the year. It lists all your revenues, subtracts all your expenses, and answers the biggest question of all. Did we make money or did we lose money? Was it a profitable year? Next up is the balance sheet. If the income statement is the story of the year, the balance sheet is a single photograph. It's a snapshot of your financial health on one specific day, showing exactly what you own, what you owe, and what's left over for the owners. And finally, the cash flow statement. This one is so important because being profitable isn't the same thing as having cash in the bank. This statement is the ultimate reality check. It follows the money, showing exactly where your cash came from and where it all went. The reports are built, the story of the year has officially been told. But before we can pop the champagne and start the next chapter, there's one final, crucial step we need to take. We have to get the books ready for a brand new year, and we do that by posting what are called closing entries. These are special journal entries that basically hit the reset button on all the temporary accounts, like your revenues and your expenses, and set them all back to 0 so we can start the next year with a totally clean slate. But wait, what happens to the profit from this year? It doesn't just vanish into thin air. That net total, the bottom line from the income statement, gets transferred into a special equity account called retained earnings. Think of it as the company's savings account, holding all the accumulated profit to help fuel future growth. And there you have it. That is the entire journey, from start to finish. This is the accounting cycle. You see something happen, you record it in the journal, you file it in the ledger, you adjust it for accuracy, you report the final story, and then you close it all out to start fresh. So as you can see, accounting is so much more than just crunching numbers. It's a language. It's the discipline of telling a true, honest, and reliable story about how a business is doing, which really just leaves us with one final thought for you to ponder. What story is your money telling? Thanks so much for watching. And hey, if you liked the content, please don't forget to subscribe. It genuinely motivates us to keep posting more.